The National Treasury has proposed to amend the Employment Act of 2007, calling for a 35% income tax on all monthly wages exceeding 500,000 shillings. This proposal comes in the wake of President William Ruto's announcement to reintroduce a plan to levy higher taxes on Kenya's wealthy and high-earning individuals. The president supported the introduction of a wealth tax that had been unsuccessful in gaining parliamentary approval over the past 4 years. During his first address at Parliament last year, President Ruto stated that his government would prioritize raising taxes on the wealth amassed by Kenya's wealthiest individuals over collecting revenue from workers and traders. This proposal is one of many efforts to increase taxes on the super-rich as the new administration looks to decrease reliance on loans for financing the national budget, given the country's increasing public debt. The president informed Parliament of his intention to increase taxes on the wealth amassed by Kenya's richest citizens, instead of relying on revenue from workers and traders. The proposed tax would be levied on the net worth of the wealthiest individuals, after subtracting their liabilities, and would only affect those with substantial assets. This tax would differ from other types of taxes, such as income tax, in that those with a certain level of net worth would be required to pay the wealth tax regardless of whether they had earned income or sold any assets. It would encompass all types of assets, including real estate, cash, investments, business ownership, and other holdings, minus any debts, and taxpayers would be required to pay it annually based on the market value of their assets. As per the proposed Finance Bill 2023, the National Treasury intends to introduce a provision to deduct 3% of an employee's basic salary and match it with an additional 3% contribution from the employer towards the National Housing Development Fund. The maximum deduction for an employee towards housing is capped at 5,000 shillings. The bill also suggests that employees who are eligible for affordable housing will have their contributions used to finance the purchase of a house under the government's affordable housing scheme. The Treasury has suggested 3 options for employees who are not eligible for the affordable housing program and have been saving for 7 years or until they retire, whichever comes first. The first option is to transfer their savings to their retirement scheme. The second option is to transfer the savings to someone who is eligible for the affordable housing program. The third option is to transfer the savings to their spouse, children, or dependents. The other option is that individuals can withdraw their contributions as cash, but the amount will be subject to taxation and included in their taxable income. The Treasury's proposals are being made at a time when President William Ruto is facing challenges in meeting his ambitious goals to fulfill key promises to the people, while also working towards reducing the country's reliance on borrowing. To get more news, subscribe to the Kenya News channel. Also leave a like and comment on this video.